Have you been asked to fill in a chart such as this one where you're showing the changes in assets and liabilities and paid-in capital and retained earnings, and you're not quite sure how to do it? Well, you've come to the right place because I'm Professor Capko, and I'm going to show you how easy this is in today's video. But first, I want to say I believe something great is going to happen for you very soon. And now, back to the video. In this example, we've got changes in assets, liabilities, and equity. We're given a problem in which we're told some beginning numbers, but not all of them, and we're told some ending numbers, but not all of them, and we have to fill in everything in between. I'm going to show you how to do that. So let's take a look at this. It's telling us that at the beginning of its current fiscal year, and first fiscal year would be the bookkeeping year. So it may not line up with the calendar year, and that is why it's called a fiscal year. The corporation's balance sheet showed assets of $12,000. That's already filled in here for the beginning balance of assets, $12,000, and liabilities of $5,000. And you can see that is also filled in here. During the year, liabilities decreased by $1,000, and you can see that that has been filled in here. Decreasing, this is the changes, decreasing by 1,000. It's put in parentheses. In accounting, that means minus. That means negative. So it's decreased by $1,000. Net income for the year is $3,000, and net assets at the end of the year were $7,000. There were no changes in paid-in capital during the year. Again, paid-in capital would be the amount that the owners pay into the company to get it started or to help it grow. The problem tells us to calculate the dividends, if any, declared during the year and indicate the financial statement effect. All right, where do we start? If this is the type problem that you're not sure how to do and you could use explanations on that, give this video a thumbs up. That way I'll know to make more videos like this one. Thank you. Let's see if there's some more information that we can fill in. Don't forget, the accounting formula is assets are equal to liabilities plus owner's equity. It could be called shareholder's equity, owner's equity, something like that. And owner's equity, that's this part here. I'm just going to call it equity. That's made up of paid-in capital, that's what the PIC is, and retained earnings. The paid-in capital, again, it tells us is 0 at the beginning, and it tells us there's no changes throughout the year. So there's 0 change here, 0 change here, and that means we're going to have 0 here at the end. And the only reason I know to do that is because the problem tells us it's 0. It says there's 0 changes. Your problem may differ from that. Also, it's telling us that the ending assets, net assets at the end of the year is $7,000. So we can go jump down here to the assets column and put in the ending amount of $7,000. We know that because the problem tells us it. So we know we need to go from 12,000 down to 7,000. So our net assets are going down. Let's see what else we can fill in. Can we fill in the retained earnings? Well, again, as I said, assets are equal to liabilities plus the owner's equity. And the owner's equity is made up of the paid-in capital, in this case is 0, and the retained earnings. We don't know what it is at the moment, but we can derive it because we know assets are 12,000 and liabilities are 5,000. The difference in those is going to make that balance. So if I start out with $12,000 in assets and I take away $5,000 in liabilities, that leaves me $7,000 in retained earnings. So we can find that number out right from the beginning. Again, 5,000 liabilities plus 7,000 retained earnings is equal to the $12,000 in assets. This is just moving things around algebraically. All right, the next thing that we can fill in is we know that the liabilities went down by $1,000. How do liabilities go down by 1,000? Well, that means you pay them down. You pay assets toward them. So the assets are paying toward the liability, so you're reducing assets by an equal amount. Because if we didn't, then our equation would be out of balance. So we can reduce our assets by $1,000. We know that because that will keep this in balance. So, and again, I put it in parentheses because we're reducing it. Can we figure out the final change here for the assets? Sure, we can, because it's going to be the difference between the 12,000. So we start out with 12,000. We subtract out the $1,000 that those assets were used. Maybe it was cash, came out of the bank account to pay down the liabilities, and we wind up with 7,000. So algebraically, if I subtract the 7,000 from the 11,000, it will give us the difference, which is 4,000. So we're reducing it by $4,000 here. So again, it's 12,000 minus 1,000 is 11,000 minus 4 more thousand gives us the ending balance of positive 7,000, which matches what we're told is there. Next, can we figure out liabilities? There's been no other changes here. There's no indication that there's another change. So this other change, I'm just going to put 0 because there's nothing else there. 5,000 minus 1,000 is 4,000. So our new liabilities are $4,000. We know there's no change in equity. Well, we're no change in the paid-in capital. There's certainly a change in equity. We're going to figure out the ending retained earnings. We have 7,000 on this side, and on this side we have 4,000. So what will the difference be? Well, if I have 7,000 assets and I take away 4,000 in liabilities, that leaves me $3,000 as my retained earnings, positive 3,000. Again, it's algebra. 4,000 plus 3,000 equals 7,000. So this part of the equation fills in perfectly. So the last part here is we need to figure out what the change in retained earnings are, and that's pretty straightforward. They're gonna be reduced by 4,000. We know that because that's the only way you can go from 7,000 to 4,000. But we need to be a little bit more sophisticated about this because it tells us our net income was $3,000. So we can't forget that $3,000 was added to our retained earnings. Just to refresh your recollection, if you don't recall, we have beginning retained earnings, and to that we add our net income. If it's a net loss, we'd subtract it. That gives us a new number from which we subtract our dividends, and then that would give us our ending retained earnings. So that would be how we figure it out. I've got a video linked above where I've done some calculations like that, going from beginning retained earnings to ending retained earnings. So what do we have here? We know we have a beginning retained earnings of 7,000 because that was what we derived figuring it this way. We know we have a net income of $3,000 because we're told that in the problem. The 7,000 plus 3,000 is 10,000. We're going to subtract out dividends. We don't know what those are, so I'm going to just put those as X. Minus X is equal to our ending retained earnings, which is 3,000. So our ending retained earning is 3,000. If our beginning retained, or our number here is 10,000, what do we subtract to get to 3,000? Well, X is going to be 7,000, right? 10,000 minus 7,000 equals 3,000. How do we arrive at that? Well, let's take a look at this. We have a $4,000 reduction here. So we're increasing our retained earnings by 3,000 because that is the amount that we are increasing our retained earnings, and 3,000 is the increase, but we have to take away 7,000 here. So if we do that, that shows us that 3,000 of this increase is 3,000 of the dividends comes from the net income. So we pay out all the net income, all $3,000 of the net income gets paid out, and $4,000 of assets, maybe it's cash in the bank, gets paid out. So our dividends are equal to $7,000. That's our dividends, what we figured out here. And just for completeness, we should really make a few adjustments to our asset side because we're increasing here our retained earnings by 3,000, but reducing our liabilities by 1,000. The 1,000, if we take it away, because it's an addition here, so 3,000 minus 1,000 is 2,000. This is actually here should be an increase of 2,000 for the assets at this stage. And then we're reducing by 7,000 here. So this should be a reduction of 7,000. So you would see that it goes from 12,000. You're adding 2,000, it's 14,000 minus 7,000 would be 7,000 here. And this is the 7,000 plus 3,000 minus 7,000 gets us back to the 3,000 here. To my channel and hit that notification bell so you never miss a video. Thank you.